Hey traders, it's Ryan from the Private Banker. Just thought I'd do some recap analysis here. I've sort of been out of the loop for a little while now. Just been focusing on some bits and pieces on my life, and still obviously actively trading, managing my wealth and positions, and also been sort of developing some new sort of edges regards sort of longer term sort of swing trades, and just generally trading a higher time frame, which can be a little bit less stressful than actively coming in trying to day trade these volatile markets every day. So yeah, so I'm just gonna run through what I've been looking at and what we're looking to do moving forward, regards to some new education, some new insight analysis to help you guys. So first off, we're gonna look at crude oil, my favourite. So what I've been leaning towards a bit more this year is removing time price opportunity from my trading edge. I mean, TPO, time price opportunity, as it's known, has been a awesome edge over the years, and I have been a great fan of this. Obviously, trading with the Jim Dalton and Peter Stedemeyer's approach to and applying the auction theory to the market. A couple of things that have concerned me about time price opportunity recently, as my understanding has further developed, is the fact that it's a little old school now, and we have pure volume, known as volume strips, as Peter Stedemeyer says, as you can see on my chart, and it takes away that third dimension, which is time. So that was always something that encouraged me to lean towards TPOs, because time is, like I said, is another dimension to the markets, and obviously time equals opportunity in the trade. But I mean, the way I see the markets auction in this day and age, with the electronic exchanges and with no pits actually now in going forward into the markets, that time price opportunity stamp slot where the day traders in the pit could do business with the higher time frames seems to not exist anymore. That party in the market doesn't seem to be there anymore, and so the business between the higher time frame, the intermediate time frame, and day traders is in the pit. That edge seems to have deteriorated, if that makes any sense. I mean, if any of you guys would like to expand on what I'm talking about here, and we can discuss this further, please be my guest to comment and have a discussion about this. But so I mean, Peter Stedemeyer tried to highlight this a little while ago, saying that he didn't believe that the time price opportunity existed anymore, and he was leaning towards the volume strips with regards to new current efficient auction markets that we have these days. So, and I believe that he is possibly correct. So on my day time frame charts, obviously I used the time price opportunity still on the Globex, so on the pit trade in hours to watch as the distributions unfold and the current profile shapes unfold, with short covering, obviously elongation, balance, and long liquidation in the market, and double distributions to help me trade, obviously, with the one time frame filters and the other nuances that we use with the time price opportunity tool. So like I said, with this moving forward, this is more of my longer sort of time frame swing trading auction edge, and it's focusing more on pure volume analysis, and obviously, as we know, with market auction theory, I mean, great example on crude this week. I mean, we see this move higher, and as we moved higher, we left this excess low at the bottom. We had this lower distribution, so we found buyers. This was attracting buyers, and obviously we were meeting sellers. Otherwise, we would have continued to auction with elongation. So this was a fair price at the time, and then we found buyers. Any weak sellers obviously got liquidated here, and the prices moved higher. And what happened when prices moved higher? we started to build higher volume up higher. So I mean, what is this telling us? We're telling us as the market is auctioning higher, the mechanism for prices is moving higher, it's attracting more traders. So even though there are obviously short sellers in the market, because there has to be shorts to execute long trades, but the point being here is that this is obviously a fair price for buyers and sellers to do business. If it was not a fair price, then we wouldn't have sat here and balanced and attracted more volume. But the point being is even though sellers were active here at these higher prices, there was also a larger quantity of buyers active, suggesting that this is a high demand area. And obviously that is showing us power of direction in the market, and it's showing us pure supply and demand at an auction level. So with that being said, obviously most of the amateur traders, retail traders wouldn't be able to see this edge, and they'd be looking to sell the market. And we can see that there is buyers present here. This is a demand area because we're seeing volume coming into the market. So the likeliness of this auction continuing higher is high possibility. And as we can see, we broke above the upper balance. We auctioned to the mean price on the week. We tested the lower distribution of this new upper balance accepted price area. We've got volume building higher. The probabilities of this market auction higher is very highly probable. And obviously leaning to the short side is not the edge here. We should be leaning long with the path of least resistance long. And eventually we finally break out of this lower distribution, we auction higher, and we're seeing a similar thing happen here. I mean, we're seeing volume coming in here. If we do look at where we are currently trading, I mean, we're currently trading right at the top of this current price range. I mean, we've got like a quadruple top here now. So and there is definitely looks like business to be done. But one thing we have to consider is obviously multi-time frame auctions. So I mean, what we've seen this year on Crude, I mean, regards the learning process here, I mean, we've seen some great lessons here on Crude oil this year. I mean, we've seen that huge sell-off, where we just see that huge macro short liquidation, basically just a price reset. And then obviously the beginning of this year we came in and we found two-way trade balance, and the market now is in equilibrium on a macro time frame. So last year we see that large value migration, that large imbalance, and we see the big long liquidation in the market. And then finally we've longer time frame buyers and sellers have finally agreed on price. So now we just see this up down auction process in this balancing range, and we will continue to see this auction balance process until we see a change. We're either going to see a change, and the higher time frame sellers are going to win this battle, and we're going to see further price exploration to the sell side below this key $42 swing level, or we're going to see potentially two things happen, or a couple things can happen. So we can see the breakout, we can see the price exploration with the higher time frame trend. We could see another sort of stop run, even though this has kind of happened here. I mean, the market came down, they slammed any weak buyers that came into the market here, they got liquidated here. So they got liquidated, their stops got run, and then the market again, the professionals knew that we were in two-way trade. So again, we see anybody who was jumping on the short here, they got squeezed. So there's two things that happen here. We see the long liquidation, and then we see a short squeeze. Again, just two-way trade balance, quite very volatile. And then so we've come up now and we've tested the bracket higher. So we're going to see the similar thing here. I mean, we're either going to see a complete dislocation breakout and then potentially a new auction unfold here as the market comes up and tries to find price acceptance up here. They're going to flush all the weak sellers out of this market. And again, we're going to see either price acceptance here, or we're going to revert back to the mean, and we're going to continue to auction this in this range. Obviously, this is a higher time frame auction, so these are just the current play. But I mean, until we see a breakout, then we should be selling these highs. But I mean, on this time frame, we're seeing on the week we're seeing an increase in volume here. So I mean, is this going to be a good stopping price, or are we seeing buyers accepting these prices and the demand coming? So it depends on if we continue to auction in this upper distribution now and hold this upper distribution, rejecting this lower intermediate term balance. We want to see increasing volume. This is suggesting that we should possibly see higher prices here. But if we come in and we look at the yearly time frame, I mean, you can see where the bulk of trade has been done, and you can see that we have seen drying out of volume here. So unless we see a complete disconnect through this area and we start to build a new distribution bell curve up here with demand coming in from the buy side, then the probabilities are that we're going to auction back at least a fair price at $49 a barrel. As you can see, there is this large bulge here that's going to be quite. It's going to be a magnet for price if we do continue to see balance. So obviously 45, 42 is another key area, but we are starting to see it again, that the volume starting to build here. So new HVN building is $53 a barrel, showing some buy side demand here. So again, it'd be interesting to see. But so we are starting to see one time frame in, and we are potentially looking to see a breakout pretty soon here. But again, until trying to predict this and time this is impossible. So you're better off just either being positioned for it, or waiting for it to break out, see price acceptance higher with volume coming in, and then look for the long opportunity. Because until then, who knows? This could just spend the whole year just in this price range. Who knows? So yeah, that's currently what I'm looking at on crude oil here. But again, just very, very key with the way that this volume comes in and is transacted with. Along with the Vwaps, I mean, the volume distribution bell curve and the developing average mean price is an extreme edge here, and again, that's just something that I've been looking to exploit further here, and potentially take out that time price opportunity, just to have pure volume at price analysis for the way that the new sort of auctions unfold. In this current day and age, with like I said, with the pit session going. I mean, don't get me wrong, I'm not saying that the TPOs don't work and there is no edge there. I'm just trying to find new edges and be more efficient and be a stronger competitor in the market. I mean, we never stop learning and we never stop developing, and we never stop finding new edges in the market. So to be arrogant and stick with one edge would be insane, because you have to change and you have to develop and you have to adapt to survive long term in the market. So obviously that's what this year I've been kind of looking into, and again, like I said, with the experience that I've had over the years, and as my knowledge and my edges developed, this is just the way that that I'm starting to lean now, as it makes most sense with the current auction process. Regards, just like I said, the pit session with the Globex sessions and the way that the volume is transacted through the period. Sorry, my mobile phone's causing a bit of interference here, but so this is one more quick look at crude here. You can see that we're basically just auctioning above and below the current distribution bell curve for this year, and again, we're hitting very key support here at this 53.60. So if we do not potentially break out here and we do break into this lower distribution here, then we are most likely going to see some of these longs that are expecting price to break out here start to liquidate, and we're most likely going to auction back to the mean. So interesting to see what happens here, and again, just I hope you can see that multi-time frame auction process from the year, because obviously that does give us key context on the way that the price is auctioning and how volume is being distributed and drawn into the market. So also just been similar situation. I'm looking at the S&P 500, and interesting thing going on at the minute. Obviously, depending on how the FMC minutes come out today. I mean, we've sort of come in this year and we put in that higher, and we pull back to that 100 EMA, and then tried to make a new high, and we just couldn't do it. Now the market's come into this sort of near-term micro balance area, and I mean, to me, it depends on what happens here. I mean, I hate trying to predict the FMC minutes because they can just be so erratic, but I mean, to me, we are looking possibly at a bigger sort of macro correction here, possibly before we move higher. I mean, if we look at the developing value on the year, the market has come back into balance now, and we've got this sort of real poor ledge low here. So I mean, there's going to be a ton of sell stops down here, and that will bring us to the developing value low on the year. And we're sort of auctioning in that bulge on the developing value from the distribution bell curve on the volume this year. So obviously at the moment, this sort of 47 area is a key area, and again, I don't know what's going to happen here today with the FMC minutes, but I mean, it does seem quite highly likely that we're going to want to auction to this sort of 2016 level, and then possibly try and move higher. I mean, we can't neglect that the fact that the higher time frame is still the path of least resistance to the buy side. The long trend is still in play on the spoons. So again, we'll just have to see what happens here. I mean, I've been just playing these range, buying the highest, selling the highest, buying the lows. On these sort of nice swings here. I mean, this week's been pretty crazy. I mean, obviously probably pricing in some of the FMC minutes and obviously balancing risk, God knows. But I mean, we've seen these. I mean, on Friday we see that huge spike down, and then yesterday we just see that huge spike back up through the bell curve. And this is again, so at the minute we're seeing very, very low time price opportunity, and then we're seeing price acceptance. We're seeing a bit of transaction here. So I mean, in theory, with the way that the volume's getting pulled in here, this is looking as if we're going to continue to the buy side today. So I mean, like I said, volume, obviously without the news, I mean, volume is looking like we're going to move higher. So I mean, perhaps we're going to make a move back up to the high of this range, which is 2100. So again, just not trying to predict, to try it, obviously what the market's telling us, but yeah, the way, like I said, the volume's getting pulled in here, it does look like we at least need to try auction higher, because it does seem there's a buy side demand here. Just trying to think what else I've been doing. So we're looking at the euro dollar as well, on the forex. Start introducing this also, and so this is the current situation on the euro. Again, similar situation here from the swing sort of perspectives. I mean, we've been taking swing shorts from the high of this range. So I mean, I'll just quickly, so we're seeing like 9 months of one time frame and down on the euro, and obviously we've got this quantitative easing on the euro. We've seen a strong dollar, so I mean, obviously we've been leaning with the path of least resistance to the sell side. So obviously taking short trades is the edge here on the macro sort of time frame. So, and we made this that's that last sort of balance, and we finally see that last dunk down, and obviously some more business to be done down here at this level most likely, and we're sort of seeing a 3-week balance coming into play here, and we've just been selling the highs of this range. I mean, until we break higher and come back up and test this upper balance, I mean, leaning off the high of this range has been very fruitful. Well, this chart move has been very fruitful. So, I mean, first of all, we took the first short in this area here. I believe we actually, I can't remember the exact entry, but it was in this area here. I can't remember if we got in the second or third spike with stops above, but this was quite a nice run down. I mean, the main target area of this was the 16 or the 1.06, and the market just couldn't make it. And we came in. You can see this lower price structure here, and the market came down, and we just couldn't trade back into this. And we formed this sort of new zone. So we put the high, and then we found the low from that previous sort of breakout key level there, and then we auctioned back up to the high, and again we just positioned short. Again, not too sure the way FMC is going to go here. I mean, if it's going to be bullish or bearish on the dollar, but we're looking for a bullish dollar, and obviously further downside on the euro here. And we look for, like I said, the first sort of major confidence area is this 1.06, and then from there we're looking for further price expiration to the sell side until we see a big change in this market. I mean, the development value on the year is skewed to the sell side still. So again, leaning to the short side seems to be the edge here still. So with that being said, I mean, we have scaled a majority of our profits into, and we came back in, and you can see here we see this sort of volume piling in. You can't see it now. You can see it on. Let me draw this. Why is it not working? There we go. So you can see as soon as we hit that high, and I mean, there was sort of volume piling in here, so obviously buyers and sellers agreeing on price here. But then we see that again. This is like when the market gets too long or too short. So the market got too long here, we see all these buyers pile in and there were sellers, we had excess from the top of this range, we see no breakouts, and then everyone who was trying to get long this area, they get short, they get long liquidated here. So we see the long liquidation, and we see the market auction into this lower distribution bell curve here. And as soon as we entered into this range and this lower distribution bell curve, you can see that the volume started piling in. So even though there was buyers present, there was also strong selling in this area. And obviously now we've seen a failed higher high, we've seen a range higher tested. So obviously the path of resistance is to the downside, the macro trend is to the sell side. So again, we know we want to be leaning to the short side on here anyway, and this also happened to be the half standard deviation on the year, which has been holding for the entire year so far. So again, we came back in, we see increasing volume. So the lightness of this coming down and testing the other side of this bell curve and finding support at this lower area. And this is very, very key support right here. This is very key support. So we come in, the market auctions down. So we've took a majority of our profits into this confluence area. So now we're risk free into FMC minutes. I mean, if FMC minutes come out and we see some parabolic spike higher, it doesn't matter because we've already banked some good profits on the trades, and that doesn't really matter now because we're profitable risk-free on the trade. So again, if we do spike lower, great, then we'll see continued auction to the sell side hopefully, and we'll possibly look to add to our core position here and get a decent skew going into the end of the week, looking for further downside. I mean, we have tested the high of last month's Vwap and value area, and we did find sellers active. So I mean, obviously now the market mission is again down to this sort of 1.06, and that high, that HVN down here, point of control, seems very, very attractive. And obviously from there we see what happens. But I mean, the rotations I'm hoping to see now is obviously a nice spike down. I want to see volume coming in down to here. I want to see a pullback possibly to now this lower balance, and further downside again to this point of control. So obviously don't want to predict, it's just a lot of hopefully what I'm visualizing to see happen here, but we just have to wait and see. So again, the FMC minutes that are going to come out today can get pretty messy. So just have to see how this plays out. But the point being is we're risk free on the trade, and whatever happens doesn't really matter. We're sort of positioned for that movement. So again, interesting to see whether we see continuation on crude here, or we see all these longs trapped and we see liquidation back into this range. If we do see a liquidation back into this range, then obviously the expectation is to see an auction back to this sort of 48-40 area. And again, if we do see a breakout higher, the first sort of major confluence is going to be possibly the high of this upper bracket here, but obviously the mean price, which is this $55 a barrel, is going to be the likely area we're going to see the stops run to. And again, from there, we want to monitor the auction process for obviously volume coming in for further acceptance or rejection, and we come back into this range and see two-way trades. So obviously the first hypothesis being that we're going to see the two-way trade on the macros because of the current theme that's been running in crude. Anyway, hopefully be a bit more active on the forum and with the recap videos etc. soon, and we'll give you a bit more of an insight into the sort of new edges and new sort of ways we're looking at the markets heading into sort of 2015 2016. Anyway, hope you all have been trading well, and your daytime frame trading has been efficient. And again, obviously with this is just basically looking at the 2 seconds at the higher time frame sort of situations, and that can help a lot with your intraday trading, because once you can trade the higher time frame successfully and understand where the longer term auctions are taking place and the extremes and the locations, that's obviously where you come in on the daytime frame and profit off of the higher time frame buying and selling, and when they get trapped in the market too long or too short, you can obviously take advantage of that as well. So anyway, hope you're all doing well. Any questions as usual, please do not hesitate to ask, and I'll catch you all soon. Take care, goodbye.